Okay, everyone, can you hear the mic? Let me know you can hear the mic, please. Okay, welcome everyone to the Pro Trade Room Plus course CPI. My name is Lee Goldstein. I'm a trading director at 10-Minute Trades. Please remember that all the trades we discuss are for educational purposes. I'm not a financial advisor, and it is possible to lose money trading futures. So trade carefully, please. Okay, good morning, everyone. And we are here for Core CPI, definitely one of the more complicated reports that we have available. I want to welcome everybody that's watching us on YouTube. It's our free stream of the week. Now, probably, it's probably recommended that the majority of people don't trade the CPI report. Um, First off, the last two reports have not traded well with our previous setup. So you have that issue staring at us. Um, the brokers are raising margin on the event. That's 100% definite. So they are 4 times the margin. And that means that they expect a volatile event. Um, Part of me thinks that it's not going to be quite as out of the ordinary as a lot of people are thinking. There seems to be a lot of talk that it's going to show that inflation is down a little bit. I don't think, if anything, it's going to show that it's down very much. But I don't think there's going to be a big negative surprise on inflation to create a really out of the ordinary news offset, where the news that's expected is so different from what actually gets returned. But part of the problem is because this has been a very complicated report to trade for the better part of a year and a half. It was a very short period of time where when you traded gold, it could be considered a family money trade, but that's long gone. This is not a family money trade um, by any shape, any way you look at it. It's just not currently. Last month, let's take a look at what happened last month. We have a different setup for today because, like I said, it's just been difficult. Bonds have not been working well. Gold has been challenged. You can see the September report. The video of the September report is inside this video I'm looking at, and there's a giant whipsaw candle on the bonds, and gold was a tricky candle as well. This is August. Let's look at it since I have it inside the video. I mean, this is a report that it's just very difficult to trade. We were trading, watching regular gold on the right, and we were trading ZF on the left and did not make money on ZF in August. Last month was October, and you could see there was a little bit of pre-release movement. That definitely can make you uncomfortable. And bonds, I mean, it didn't look like the move was all that bad, but it was difficult to make money on this report in October, and in September we had a whipsaw. Let me tell you what my notes are in October. So hang on. There's no set rule, John, that says it's always going to be this way. Usually when the consensus is exactly as expected, it usually doesn't create as good a move as if the news is different from the consensus. So more often than not, a difference in consensus is what we call the offset, and a better offset is usually a larger offset. But there's no set rule. You can get a day where the news is exactly as expected, and it's a perfect big move as if there was a great consensus. So it's not just the news that moves the markets. It's certainly the guiding issue, but it's not always the same because, and that's just the reality of trading the news. Sometimes you get a good consensus and it goes exactly the way you think. More often than not, a consensus that has a big difference is good, more often than not. But we've seen, I've been doing this for 7 years. I've seen plenty of trades where the news is exactly as expected and we have a very profitable outcome. So you just never, you don't want to use the words never and always ever. And right, what Chantal's saying, when they increase the margins, less people are trading, definitely. And that on its own can create more volatility because there's less liquidity in the markets. It's sort of like they create their own problems, by getting everyone all worked up over the report. We actually canceled last month because of that early move, okay? And that's one of our rules. One of our rules says if there is an unusual move prior to an event, then you have every reason to cancel the event. And when we went to October, it was quite an unusual move prior to the news. And especially because it's a high margin, volatile event, normally I probably would not have canceled, but because it's not our normal, just regular everyday news trade, out of abundance of caution, we did cancel. And you know what? In looking at it, when I back up and take a look at gold, let me see the exact move at the exact moment. You could see gold was really volatile before the news. I believe that gold probably would have been a safe, profitable trade on that report, just by the way that it moved. So anybody that traded gold, I'm willing to bet they had a nice profit on that. John, you could take your caps off if you don't mind, please. And I'll be trading the euro only because that's the only setup that has decent testing. And I would say that the average person, this is not the trade I just think there's a lot of risk and danger, risk and volatility in this event. Risk and volatility in this event. And, you got to keep in mind to trade gold is quite expensive because it's 4 times the margin also, right? 4 times the margin. So that definitely, for many people, means they can't really do the trade. You could trade micros, right? You could certainly trade it with micros. let me show you the quick testing that I did on the euro. So we came up with a setting that we feel is safe for the euro. We'll put it this way, it's been a setting that was pretty good over the last 3 months. This was October. Now, the interesting thing about our testing is that we showed that the euro made very big moves, but it's very difficult to stay in long enough because it tends to reverse before it makes the big move. That was the problem I had testing. I could not. I wanted to capture like a 50 tick move in the euro, and I couldn't do it if I protected profit. And if I hit my first target, I almost always protect profit. This was September. September was an extremely difficult month for this report for almost every instrument that we traded. You could see what happened is it reversed so fast. It was very difficult to get out with a profit. Very difficult. When a report reverses at that speed, it's hard to get out, even if you automate it. That was a quick whipsaw. And then in August, let me get to the right spot on the video. All right, August. How often do you not get filled on a trade? Is that what you're asking? August had a pretty nice burst up, plenty of time to protect your first target. Then unfortunately see it pulled back. You can't even see it with the naked eye. If you protected your profit, it pulls back. I'm going to keep the news off to the side so I can look at a full-size gold chart, just because I want to watch the quality of the move on gold. Okay, hold on here. Let me get my screen set up. I'm going to set up the euro. There was quite a bit of news overnight also. And not a lot of great movement from it either. I didn't see all that much movement out of the British report last night. GDP, Euro GDP, took a while to have movement. It did ultimately have some movement, but it took a while. Bear with me, I'm just doing something in the background that I have to do. Okay. Now let's take a quick look at the DMM that we have. So the issue with the euro is you've got to take a significant amount of risk. It's a big stop. We don't often have a 40 tick stop. Don't often have a 40 tick stop. Okay. So if someone wanted to trade this, so a couple of things you think about. What could I do to reduce risk if I want to see if the trade's going to work? Well, we could trade one contract and look for about, say, an 18 tick target. That might not be all that reasonable, but no matter how you shape this report is high risk. No matter how you shake it, it's high risk. Let me see if I created a template when I was testing. Yeah, CPI 6E. So the trigger time is a breakout trade triggering at 829.58. And I was trying to go for a big target, which isn't really viable in my opinion. If I was going to trade two contracts, I'd probably look for a 12 first target, 12 to 15 on the first target, and probably 25 on the second target. But I don't think even for us, it's good risk to reward on this report because of its behavior. It's if I'm teaching that we want to trade the best of the best, this isn't the best of the best right now. It's not behaving like a best of the best. So what I'm interested in, but I do want to see if our setup is any good. So that's important too. So I'm interested in a one contract trade, and I would look to just get my first target to see if we can get a first target. So I'm going to use a target of 19 ticks. I'm just going to trade one position. It doesn't change what the stop is, but should the market move 15 ticks, then I'm going to move my stop to break even plus 10. If it moves 15 ticks, I want to protect at least 10 ticks of profit. And I'm thinking about this. Yeah, because there's a big stop on this report, if the market moves 15 ticks in our direction, it'll automatically move my stop to break even plus 10. So if it keeps going in my direction, I'll have a possibility of 19 ticks. The testing really showed that you could look for possibly 20 ticks or so on the first target, and then you definitely have to manage the trade on the euro. So I'm going to trade a 15 bracket, looking for one target, 19 ticks. The stop is 40. If the market moves 15 ticks, I'm going to use the software to move my stop to break even plus 10. The trade is labeled. And I'm going to save the template so next month we know how we traded it. And I'm going to call it CPI 6E1 contract. and I'll date it today. And I'll check my bracket size in Sim by setting the time to 0. So that's a nice size bracket. Now the gold market is opening right now. That's why you're seeing some volatility in gold. I'm going to put my time back to 8:29.58 on the euro. And if we get a very unusual early move, I would probably do what we did last month. I would probably cancel the trade. Put my charts on live. And gold, if anyone's interested in testing, for instance, micro gold, regular gold, if you have enough margin, the bracket is 12 with a target of 10 and 20 with a stop of 25. Activation 8:29.59. Bracket at 12, 8:29.59 on the activation. Targets, first target 10. I'd probably make my second target anywhere between 15, anywhere between 20 and 35 on gold, and the stop is 25. But I'm just watching gold because I want to really pay attention to the euro and see what happens. Going to check our sync by going to the website time is. And I do anticipate, it's definitely anticipated that inflation's probably going to show a minor tick down. That's what everyone thinks. Go to website time.is and our computer is in sync. So 2 seconds before the news, we will get a bracket to show up on the charts. Just to also give you an idea, if you go back to May, for instance, I have a video where in May, what were we doing? We've had a lot of different setups on this report. In May, we were looking at bonds. We had oil we were looking at back in May, and we were looking at gold. Gold with a very similar setup to today. Bonds. Now, when you look at the margins, because this is an up, it is a trade where the margins are increased 4 times. Okay, 4 times. So when you look at gold, it's 8,000 per contract. But remember, you have to double for each bracket. Above and below, you got to double it. So it requires a significant amount of money. One bracket is 8 times 2, 8,000 times 2, because that's what the brokers do. Not just because our software, the definition of any bracket trade means it's double the amount of orders. If you have 1 order, it's 2. So you can understand why it creates an inability for many traders to have enough money in their accounts. You might have to have 30,000, more than 30,000 in cash. The euro is 500 times 4, so it's 2,000 per contract. So you have to double that for one bracket, double it again for another bracket. Okay, so you understand why it can get expensive when the brokers raise margin. This was the move in May. And you could see that what happened initially is it jolted up very high. Okay, jolted up very high. And then it pulled back very fast. And it was not easy initially to get your stop into safety, but then it did get into safety and the trade did work in May. But again, you know, they're raising margins. There's a lot of volatility. It's definitely a trickier trade for the average person to trade. The gold move in May, watching the right chart, gold moved early, okay? Gold moved early. It started shooting up more than a second before the news was released. So definitely a complicated risk-on trade to take. The news that's expected, the important news, CPI year over year, month over month, those are the important numbers, okay? I do want to thank everyone who's watching us on the stream, so thanks on YouTube. And thanks for hitting that like button over there. We always appreciate that. So I had an issue this morning trading Home Depot. My charts were not showing stock movement, and I did figure out what the problem was, I'm happy to say. So it's funny, almost everyone who traded the trade made a little bit of money. And when I saw my charts not moving, I just exited my trade. But interestingly, quite a few people just stayed in, which we always see this, people trade well and made a little bit of money on Home Depot news. It was not the traditional burst that we were expecting. All right, so we're very close. We've only got a minute and a half. We'll see if the euro works at all. If our setup is decent. Watching gold on the right. So we have 1 minute. Markets are, when you look at the euro relatively calm right now. Gold, I don't know if gold knows calm anymore like it used to. I mean, years ago, gold was so much calmer, I guess. These days, gold is sort of like oil, and see what I mean about early moves here, folks? We have a pretty good sized bracket. But my finger's on the cancel, okay? Right now it's calm again. We have a decent bracket. So that was a crazy, insane whipsaw. Crazy, insane whipsaw. So I'm going to just reboot because I know it's got a fake order there. Not a good report to trade, not a good report to trade. And that's why I recommended that most people don't take this trade, because that was not a safe trade. So let's take a look at the video. Hang on one second. And let's take a look at the news. The news is what was expected. Whoops, hang on, let me fix that timeout. So when you look at the news, it was pretty much exactly what they were expecting, a slight tick down, a slight tick down. Okay, a slight tick down on the expectation on the news. Let's look at the video. Hang on one sec, I have to enable it. Take a minute, not even. All right, here's the move. So the reason it was an unsafe trade is because it whipped so fast. It took longer than you would normally expect to get out of the trade. So it bursts in one direction. And part of the issue is it bursts so fast. It took time to get out of the trade. It filled down here. But this is exactly why I don't recommend the average trader take this trade. And this trade was not good to us. Maybe even wasn't, testing it cost us money. Okay. But it filled us at 205. Okay. It wasn't a terrible fill. The problem is it burst up instantly and caused a loss. So that's the problem. And that's the reason the trade didn't work. And it's not even so much that the news was untradeable, because what you're trading is whatever the move is. So whether the offset is big, small, or indifferent, you're trading the news and the way it responds. In this particular case, it was pretty much what they expected, but it still created a very large move in the instruments. And if you look at various instruments, gold did what the euro did. My guess would be the NQ shot down and shot up. Almost everything almost everything does the same type of move often on this event. So just two executions that had a sell and a buy. That's it. It's just like what's on my screen. So it sold at 205, like we said, sold at 205. Sold here and bought back up here. Okay, not a good trade because of significant risk because of volatility, because of margin increase. So, and that's a move that we have not seen. We haven't seen a move like that in many, many months. We've seen some not great moves on this event, but not a move that was unsafe at that level of volatility. So, it's just a heads up to be careful on any of the higher margin, more volatile, potentially volatile trades. It's an absolute heads up, is what it is. So, I'm not sorry that our recommendation was for most people not to trade this report. Let's look at where we're going to be for the rest of the day. We still have two more events to trade. And we will be here at 4 o'clock for the API report, and then a short trade room this evening, 7:15, for the Australia Wage Price Index. Yes, Jurgen, when it reverses that quickly, sometimes you'll have to exit manually. Yep. Absolutely. Can happen. I mean, that was a very unusual trade, and that's not the norm. But we had some signs that it might be a risky trade to take. Okay, everybody will be back at 4 p.m. for API, and challenge folks, I'll see everybody in the classroom at noon. So for challengers, I'll see everybody in the class at noon. David, I don't think I'm going to have an answer today, David, just because of where he's located. But I hope that I have an answer soon. But as soon as I know anything, I'll let you know. Obviously. The question is, we don't know what the problem is yet. That's the problem. We don't know if it's the computer conflict. That's the issue. Don't know where the problem is yet. Okay. All right, folks, I'll see everybody at 4 p.m. for the next event. So I'll see everybody later.